Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we're taking a look at 3M Company, ticker MMM. I got an alert that they were up to a 52-week high, so I wanted to take a look at it and immediately closed down my position because I was up 40% on it. And this is a stock that I've owned in the past. I was one of those stupid people who was purchasing this thing around $300. I mean, they split off a portion of the business, so everything's been corrected, and it doesn't even look like it's been that high. But I thought that it was a great dividend stock back when I was doing dividends. And this is a warning to dividend investors who are solely focused on yields, because this will probably be a pretty quick video here. The fact that they had negative net margins this last year already disqualifies them from being able to be purchased. Debt to equity of 9.5. I feel like that's one of the worst balance sheets that we've seen. I mean, I can go on and on. Fundamentally, this is an awful, awful company. But dividends, cool. You're getting paid out 4.8% right now. They're barely raising that dividend, 0.5%. So inflation itself is eating that thing away at least 1.5% every single year. But if you look at their earnings from last year, they had a payout ratio of negative 47.5%. There's no reason that they should be paying a dividend and losing money at the same time, which I know a lot of that was they paid the lawsuit for forever chemicals in the water and put it all in that 1 year. So it wasn't truly negative. It just hit the balance sheet like that. But even this next year, analyst expectations for their earnings, 82.4% payout ratio. We like to see that thing around 50. Once it starts creeping up over 75%, they can't reinvest into the business. Like, you're not going to see a lot of growth in your position, and it essentially becomes like a utility at that point, like a bond, where it's just they bring money in and they just pay it out to their investors. And there's not much growth, there's not acquisition potential, there's nothing left into it. So once it starts creeping that high, be wary. There are certain exceptions like REITs where they're required to pay out 90%, which we're about to take a look at a REIT in the next video. That dividend is likely in danger. That's my warning there. I mean, I'm coming up with a fair value, 134, actual value right now, 125, discounted cash flows, 122. After I plug in a reasonable case scenario, I'd like to see the margins get positive. It's not easy to do based on the way that we look for consistency in companies. But between the declines in the revenues and the cash flows and the liabilities outpacing the assets, you're looking at the value of the company shrinking year over year. This situation getting worse and significantly underperforming the market. I don't want to get too deep into it, but they have so much debt on their balance sheet. Negative tangible assets. We know I don't like those. A negative tangible book value. There's not much that I'm buying this stock for, aside for its revenues and its cash flows. And even then, its revenues are consistently declining. And its cash flows are doing the same, with an extra dip in 2022. So it's, at the moment, a company in free fall. Buying it is catching a falling knife. I was stupid when I first bought it. I wrote it down. I liked the yield at the time. I was buying it at like almost a 6% yield. And I just sold out of it for a 40% gain because things weren't as dire as the market had priced in, but it's still pretty bad. So we can check in on this thing down the road, but how it stands right now, it's just a warning that don't be suckered into a falling knife and a yield trap. Because it's happened to me a lot of times in the past, and that's when I started to learn about how to read the numbers and actually calculate what I'm buying. And that's not what I want to be buying and feeding into my portfolio. So I want to thank you guys for watching. Please like, enjoy the video, comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.